Hi there, Scott with the Sackin team. I'd like to talk about something that's not real popular with most people today, and that's property taxes. I'm getting ready to pay my property tax bill, and I thought I'd share some information based on several questions I've been getting from clients of mine. The three questions are, number one, how does the tax year itself work? Number two, what's the difference between the due date and the delinquent date? And number three, what if I'm contemplating selling my house or I'm in escrow? How do my taxes get paid? Let's tackle question number one first, the tax year itself. Think of the tax year as splitting the normal calendar year in half. Therefore, the current 2013-2014 tax year runs from July all the way through the end of June of the following year. I'm getting ready to pay installment 1 right now, which covers the first half of the 2013-2014 tax year. And that runs from July 1 to December 31st. Hence, installment number 1. Question number 2, due date versus delinquent date. You'll see on your tax bill a due date of November 1st, a delinquent date of December 10th. As long as the bill has been paid by December 10th, you're good to go. In some areas, postmarking is okay. I'm not a tax consultant or an expert, so you want to check on that yourself. But the bottom line is if you're in the hands of the tax collector by December 10th, you're good. Then for installment 2, the second half of the year, due date February 1st, delinquent date April 10th. So as long as it's in their hands by this date, you're golden. Third question, what happens if I'm in escrow or selling my house? Let's take the example of a good client of mine right now. We're scheduled to close on November 3rd. Well, she isn't due until here in December. Escrow will take advantage of paying her July, August, September, October, and prorated November portion through the escrow, and then they'll collect the remainder of this first installment from the buyers at close of escrow. Now again, a little tip, that'll be based on her current tax base. The buyers will get reassessed based on what they paid for the property in the form of a supplement later next year, and they'll have to make up that difference. But once again, I think we've answered those three basic questions. The tax year, again, is split from July 1 to June 30th of the following year. Number 2, you have 2 installments. The numbers to know are your delinquent dates, December 10th for installment 1 and April 10th for installment 2. And the third question is, if you're selling your home, escrow and your realtor should advise you as to how to make sure your taxes are properly prorated through escrow or paid in advance to make sure you're on time. I hope we provided information that's different and better. Thanks for watching.